Hey traders, Raghee here, and in this recap video I'm going to walk you through some intraday nuance to a trade that we took literally 24 hours ago in the post-close session. And this is follow-up on the 60-minute ES short from the 25.53 level. I'm going to talk to you about what's happened since, how you can understand what this trade was, put on a similar trade on your own, and then also what are some of the levels that I'm looking at going forward. So looking at the ES, I'm not a big fan of shorts. I'm not a big fan of selling this market. I like the overall uptrend, but if there are opportunities to go counter trend, and this is counter trend, I'll do so only on 60 through 5-minute time frames or less. 1 minute, 3 minute, that's fine. But it's got to be a shorter term time frame, and for me, that's a 60-minute time frame or less. So the first thing you're going to pick up here is if the market's trending higher, the daily time frame is showing strength. If and when you decide to go with a counter trend trade, do it on a shorter term time frame. Do it nimbly. So what we found in the post-close session, setting up the Asian markets going into the Auckland, Sydney, Tokyo, Hong Kong, Singapore Open, was this short off 25.53 in the ES. And that was back in here, right back here where this yellow line is. So we took that short with targets to the downside in the 25.48 mid-range area. One of the things I love to do is look at the middle of a choppy market. It's uncanny how often the midpoint or the mid-range, the middle of the chop, is oftentimes where the market will catch a bid. It's just uncanny. Always know the halfway mark of the chop that you're trading. And as long as this market stayed below the 25.56 level, which was our stop, there was a chance we could hit 25.48, and there still is a chance we could hit 25.43.5. Now, some traders missed that, and then they saw later today, oh, Rag, we hit that same level. So I asked the question, is this still a choppy market? Yes. Am I still seeing the sideways 34 EMA wave? Am I still seeing red and blue and green grab candles all together? Do we not have any propulsion? That's a big deal. When we took this trade, there was no propulsion. So we see red, blue, green. We have the sideways wave. We have no propulsion. And we're still exhausting along these three previous Darvis 2.0 levels. So the ceiling is really in place. The 25.53 was valid again, and it hit 25.48 yet again. Now you might say, okay, 25.53 to 25.48, that's about 5 points. Remember, the typical price movement range for the S&P hour to hour is about 5 to 6.5 points. And after you leave the prime time hours of the US session, it drops to about 4 and less than 3.5 points. So think about your typical price movement range when you're putting on these trades, and that's where you can place very realistic stops and very realistic profit targets. So I'm still holding out with half of my position with the 25.43 in mind. Okay, so only half now. I've cut my risk in half. And if we trade back above the 2556 level, I still have 3 points at risk. Quite frankly, if you don't want to risk that much, you can put your stop just above today's high. You can look at the level here at, say, 25534, right? Or 25534 and a quarter would be even better. That way you're above this high here as well, which was actually 255. Okay, no, that's 2553.5. Yeah, is that what that? It's so small, it's hard to see. 2553.5. So anywhere between 2553 and a quarter to 75 to 3/4 is fine. But you see what I'm saying? That would be a very tight stop. But since I've already taken 5 points off the table, I'm risking those 5 plus another 1 to 1.5 points with the ambition of getting down to 2543.5. What's the point here? Look for choppy markets. Understand if you're trading against the trend. Keep tight stops within the context of choppy markets. Look for the midpoint, and then make sure when you hit that midpoint, take something off the table and start to treat this as a market where you will no longer let it represent a large risk. This wasn't a large risk to begin with. It's a 3-point risk. Quite frankly, you can leave it at a 3-point risk now. So we'll see what goes on into the Asian session. It's already given us 2 shots at a 5-point winner. Let's see if it can't give us the rest of this trade down to 25.43, which, by the way, is also Darvis 2.0 lows. So again, we're not plucking out random levels. We're looking at levels that were important support points in the past. All right, I'll see you in the next update.